Okay, global cues are weak this morning. Here's Nigel with the world view.
Well, as you all were stating, yes, in fact, overnight the cues are quite weak. All the U.S. markets, they ended in the red in yesterday's trading session. Larry Kudlow, he said that, in fact, President Trump and Chinese Premier, they are unlikely to meet in the near future, and they're far from striking a deal. And that was something really that, was welcome with a lot of selling pressure. CNBC sources as well did say that they're unlikely to meet that deadline, and that was what gripped, the markets in yesterday's trading session. Remember, if they don't get a deal, then additional tariffs come on the table. And whenever we hear of some trouble in terms of trade talk, well, all these stocks, they take a bit of a hit. Boeing, John Deere, as well as Caterpillar, all of them were down close to under %. The Nasdaq was a relative underperformer. That's because Twitter came out with its set of numbers, looked better. But the theme this quarter for the US markets and for all those stocks that are coming out with numbers is good numbers, they're welcome, but guidance is softer. The stock takes a hit, and that's why Twitter was down close to around 10%. European markets as well were under pressure. Very, very cautious commentary coming in, both from the European Union as well as the Bank of England. The European Union has cut their 2019 growth outlook to around 1.3% from the earlier guided closer to around 2%. And in fact, the Bank of England said they're expecting the weakest economy outlook for the UK in the last decade or so. And that's why we saw a lot of selling out there. Fiat Chrysler, that came out with its set of numbers. Again, softer guidance. The stock was down more than 10% in yesterday's trading session. This morning, we're looking at the Asian markets, all of them sitting with deep cuts. Remember, a few markets out there are closed as well. The dollar index continues to strengthen, so the rupee will be in focus. But the good part is Brent crude prices have cooled off close to around $1 overnight. SGX Nifty indicating a cut of around 20 points now, just to kickstart trade. Back to you guys.
That's not a great deal. Thank you very much, Nigel. A 20-point cut is something we can take after a decent rally. Well, the China slowdown, we already, as Nigel was pointing out, other central banks like the ECB are also pointing out to slowdown in their countries, in their continents. I caught up with the economist Kenneth Rogoff, a former chief economist of the IMF, definitely one of them best informed about both US growth and global growth. He was speaking to us at the India Risk Management Awards last evening, and his worry about China is something you must listen. He just doesn't believe the official numbers. Just hear what he has to say, because that seems to be one big factor that is affecting now even Indian companies.
China really does seem to be slowing down more than the official number. The official numbers, it was 6.5 instead of 6.6. You've got to be kidding. That's statistical error. No, it probably slowed down a lot. I think in Europe, that's what Germany's feeling. That's what a lot of Asia's feeling. So looking more broadly globally, that's much slower. And the whole world affects interest rates. It's not just the United States. I think that's the thing we see, and I would say it's more acute than the conventional wisdom. When I talk to people at the World Economic Forum, they say, oh, the Chinese will just do stimulus, it's no problem. They've already done some, but it hasn't been as effective as it was in the past, because a big part of their stimulus was through construction. A big part of construction was housing, and it's starting to reach the end of the line. When you're a poor country, it's still very poor compared to Europe, and they have the same housing per capita, the same square meters, a huge amount of employment. It's very delicate, and there's really some downward pressure on housing prices. Now, they can do things to push it up, but that could make it just worse later.
Okay, so those are some big concerns coming in from a man who's seen the global economy up close.